Welcome, everybody. It's Itashwa Watkins, your favorite realtor, and we're back again with one of my favorite people in the world, Peter Karlin, the mortgage expert, the man that you come to when you want to get a deal done, when you want to buy that house of your dreams. This is a man that I point everybody to most.
Thank
yes,
you,
sir.
Itashwa.
Yes, sir.
Good
yes,
to
sir.
be here. Appreciate
Good.
it.
Everybody loved your last video, matter of fact, in
Isn't that
terms
cool?
of, yeah.
Oh, cool.
Yeah. So I wanted
Cool.
to bring you back and give them a little bit more tidbits on this mortgage game, because I think that's one of the most important steps in terms of buying a house that most people don't really know about. Like, they know that they got to go out and get a realtor, but I'm surprised a lot of the times they don't understand that that one of the first things that they should do, I believe sometimes even before coming to see me, is to go see you.
Yeah, I think a lot of people just make the assumption that, oh, I'm going to get I'm eligible for mortgage, or the way to go about it is find the house first and then figure out the mortgage.
100%.
Right?
Yeah.
And you've of course experienced that yourself.
Yeah.
Right? So, but if you think about it, right? I mean, if you really think about it, well, I should get my finances in order, right? Because you got to have, what do you got to have? What are the things you got to have to get a mortgage? You got to have income. Actually, these days you don't have to have income. You could have, right? There are other ways to get mortgages without your standard traditional income, which we're going to talk about.
We're going to go into one of those.
We're going to go into one of those, right? But typically you want to have some source of, or some alternative source of income, right? So you gotta have income, you gotta have credit, you gotta have good credit, or you want to have good credit, because credit has a direct correlation to interest rate, right? And the kind of deal you're going to get. And then you got to make sure your debt to income ratio is in line. And then you've got to have the money for the down payment and the closing costs. There's so many people that I have met that say, they sort of come to me and hey, I have, $5,000 to work with. And I'm like, that's not going to buy you a house in New York right now,
Maybe in a couple of other markets somewhere out there, but definitely not in New York.
It's just not going to cut it. So, the first thing I think everybody wants to do or should do, right, and I know you're in agreement, is you sit with a mortgage broker, a mortgage banker, a loan officer, and you figure out your strategy. And you want to figure out what, where you stand now and where your comfort level is, right? Where you want to be, right?
Yeah, 100%.
So that's critical. And I think the other thing I tell people is you want to be pre-approved by a loan officer before you go looking at homes, because, well, first of all, frequently these days, as you know, Itashwa, you got to have a pre-approval letter.
Yep, you ain't getting into no house without a pre-approval letter.
So the first thing is you need a pre-approval letter to walk in the door frequently.
Yep.
But then when you fall in love with a place, right, and now you're going up against other people who are bidding against you.
Yep.
You want to be ready. You want to give that listing agent, you as a buyer's agent, right? You want to give that listing agent a pre-approval and say, my banker has gone through that. These folks are rock solid, ready to go. All their documents are in.
Yeah.
You want to accept them.
Yeah.
And then frequently I'll get a phone call from the listing agent asking me, did I do my work? Did I look at the documents? Did I run the credit? Did I run a Fannie Mae DU or a Freddie Mac LP, these automated underwriting system programs, and make sure that this person has been pre-approved properly. And that's when they'll say, okay, great, Peter, I feel comfortable. And, they'll move ahead with, presenting the offer to the seller. So you definitely, it needs to happen up front.
Yeah.
It should happen up front.
I think you touched on one thing really, really important, is that down payment and that those closing costs. And I know that everybody wants to have that lined up and ready to go. But we were talking earlier, and you were telling me there's this new program that's out there where you can get $5,500, and you can use that towards anything, correct? Or
so so the $5,000. First of all, it's called Home Ready SPCP.
Okay, Home Ready SPCP,
and it's for first-time home buyers. It's for first-time home buyers, and it's such a cool program because, there's a lot of grant programs have your income limits. Like you can't make too much money, or you won't qualify.
Yeah.
And then it also depends. Other programs depend, like perhaps where you're buying. Like there's different. Anyway, this particular program is about you being a first-time home buyer.
Okay.
And you living in a metropolitan statistical area.
Okay.
A metropolitan statistical area, and where you live, right? Where you rent,
Okay.
right? And if you qualify on those two counts, and you have good enough credit, and you're putting down at least 3%,
Okay.
and it's a conventional loan, a Fannie Mae conventional loan, you can
Okay.
get a $5,000 credit
Yeah.
off of your free money, off of your closing costs,
Okay.
a $500 credit off your appraisal, and
Oh.
if you're buying, I think if it's a newly constructed property, $500 off of the warranty,
Okay.
off of the 1 year warranty. I don't talk much about that part, but it's
So
it's another
500 off
$500
off
of
the
like
warranty.
a warranty.
And
Yeah.
that's all on top of the 5,500, or is that
Yeah,
part of the
so
5,000?
it's the 5,000
Okay.
plus the 500 for the warranty and
Okay.
the 500 for the appraisal.
Oh
So I
wow.
mean, all total, you know, it could be a $6,000.
It could be a
credit that you're
$6,000
getting.
credit that
Yeah,
you're getting
yeah,
back just for being a
it's
first
amazing
time
stuff.
home buyer, definitely. And you mentioned Fannie Mae. So we hear that all the time, Fannie Mae, Freddie Mac, and all these people. Can you tell us a little bit about who Fannie Mae is?
So Fannie Mae and Freddie Mac, they're called government-sponsored entities, or
Okay.
GSEs, government-sponsored entities or enterprises. I forget. But these two organizations, they're sort of quasi-government run, and they buy and back. I think it's like 90% of the mortgages in the United States,
Yeah.
if I'm not mistaken.
So they're a big deal.
They are extremely important. And
100%.
and like when you say like a conventional loan,
Okay.
so it's Fannie or Freddie guidelines
Okay.
that dictate someone getting a conventional loan.
Oh wow. So I didn't even know that Fannie and
Fannie and Freddie,
Fannie-
yeah, those are the
the
guidelines.
guidelines that
When
do a
you say
conventional loan.
conventional, right? So
Uh-huh.
and then you have FHA, right?
Yep.
That's another government related or government, by HUD. FHA,
Yes.
the FHA program is by HUD. So, but Fannie and Freddie, and you've heard we say DU, right? Desktop underwriter.
Yep. Yep.
And loan prospector LP. Although I think they may have changed the name recently. I'm not sure, but it's LP, and those are automated underwriting systems that
Got
we
it.
run to see if someone's going to be approved by the guidelines
Yeah.
of Fannie or Freddie.
So one thing that a lot of people they say is that, okay, I'm not ready to run my credit. How do we go around
So there's
that?
right. I get a lot of people who say that. There's two really wonderful ways to handle that.
Okay.
So number one is I will frequently do a soft credit pull.
Yes.
Right. So a soft credit pull does not do it. And what's the big fear when people say, "Hey, don't run my credit"? The big fear is that they're going to get a point decrease, right? They're going to get a hit in their scores, right?
Yep.
That happens sometimes, and it will happen. It'll happen much less if someone's credit is really good and not run a lot. But if someone's credit is not so good and they do a lot of inquiries and they but not the same inquiries. Like if someone runs credit and they go to a mortgage bank and with it's I believe it's typically in a 30-day window.
Yes.
And you go to like 3 different mortgage banks.
Yeah.
And if they were to all do a hard pull, you wouldn't get hit each time you did the hard pull.
Because they recognize you're
Get hit
shopping around the loan.
because they see you're like in a shopping mode.
Yeah,
Right.
okay.
So you might get hit for that first pull, and
Yes.
it might be just a few points if your credit's really good.
Okay.
Or a point. And sometimes I've seen nothing at all.
Okay.
Right. It's when someone shops for credit cards and they shop for a mortgage and they shop for this and they shop for a lot of different things and their score's not great to begin with.
That's when you
could
get
see more of a
dinged.
drop. You could see more of a
Got
drop.
it.
But-
So that's good information, definitely.
Yeah, that's important to know. But I'll typically do a soft pull, as I say.
Okay.
But then, UWM, right? UWM, United Wholesale Mortgage, you know them.
Shout out to UWM for hosting
Shout out
us.
to UWM.
Yes, we had a good time.
They have something called Safe Check.
Okay.
Safe Check. And Safe Check is really cool because Safe Check allows a loan officer or a lender, not a lender, a loan officer, a broker, to run a soft pull,
Okay.
and then also to do an AUS, an automated underwriting system pull. You cannot do that, to my knowledge, with any other system.
Yes.
So if I do a soft pull in my loan originating system, I can't run an AUS off the soft pull.
Okay.
But in UWM's system, if you do a Safe Check, you could not only do a AUS, but you could submit the loan for an underwrite. You could submit it for an underwrite with the safe check. What's the benefit of that? Because when these days, I don't know if you're aware, but when you do a hard pull, not only can you see a point degradation, but also there's this thing called trigger leads.
Okay.
So what happens is when people do hard pulls and they don't opt out, like a lot of other lenders and a lot of other people find out that they're shopping.
Oh, wow. So now you're going to start getting calls from
You get phone calls on
everybody.
it. Yeah, it's a big deal.
Yeah,
It's a
yeah,
big deal.
yeah. I can understand.
Yeah.
Definitely. And this is just with the UWM, correct? Or
Safe check is just
with
the UWM thing. Yeah.
Again, shout out to UWM.
Yeah, that's right.
Maybe a little bit of selfish reason behind it because they don't want everybody else knows that you're shopping around. But yo, it saves you the headache of people calling you. So I love that. I love
and
that.
the other thing that's cool with UWM, when you do the safe check, then they also, they'll also put you into the opt out, assuming you want to opt out, so you don't get these trigger leads, and you don't, when you run your credit or something like that, the whole world doesn't know about it. It's crazy. Like if you run your credit and you don't opt out, it behind the scenes, and so many people don't know this. That's
A ton of people.
Peter, how come I'm getting all these phone? Why did I get all these phone calls? It's trigger leads. That's what's happening.
But it's like the same thing with like when you go shopping on Amazon and I look at something and every time I turn around, I'm getting feed from TikTok,
Itashwa,
from
it's the
Instagram,
same,
Facebook.
It's the same thing, man.
Yeah.
I know, it's crazy. It's kind of scary, right?
It is.
When you're like, now all these ads start coming. Like it's a little bit,
man.
it's a little scary.
bit, Dobby.
It's a little
Yeah,
scary.
definitely. So we touched on UWM, and the last time we were here, we spoke about where you're at now with Go Rascal.
Yeah.
And I've been telling a lot of officers out there that I work with about Go Rascal, and
Thank you so much.
Yeah, you're welcome. You're welcome.
Itashwa, how about that, Scott, David?
But because you guys do such a good job, I think a lot of loan officers are scared because it's such a new company. Can you tell us a little bit more about Go Rascal and why you made that change?
Thank you so much for asking. I appreciate that. I've been in the mortgage business. This is my 11th year. I started in January of 2013.
Yeah.
And for 10 years of my career, I was a mortgage loan officer for lenders, right, for banks, for mortgage banks. So now I'm a broker.
Yeah.
Right. Go Rascal's a broker. So now what's the difference? What's the difference between a broker and a mortgage bank? Right. Well, the bank does their own underwrite. Right. In-house. It's you're lending from, you're borrowing from the mortgage bank.
Yep.
And it's in-house underwriting. Right. When you're a broker, it's just like as a realtor, right? What's the definition of a broker? You're bringing two people together,
Yep.
right?
A meeting of the
buyer,
minds.
seller. So we're bringing together the lender and the borrower, right? We're bringing together the lender and the borrower. There's a lot of misconception about a broker, which I thought, and I heard when I was a banker, right?
Yeah.
When I was a loan officer for a bank. And a lot of misconceptions are you don't have control over the file. You can't speak to an underwriter. It's the pricing is not as good. It's so far from the truth.
You're kicking them, their butts.
It's so far from the truth. I got to tell you. I mean, with all due respect to the retail world, the broker world gives me the ability to, and Go Rascal, yes, Go Rascal is a brokerage that started in September of 2020. In September of 2020. Really went through, getting off the ground in September 2021, 2022. When I started with them a year ago, January of 20,
I remember when you made the switch.
2023. They had about 20 loan officers. Today, there's about 130 plus.
So we're growing.
They're and last year was like a down year.
Yes, 100%.
Right?
Yeah.
A lot of people left the industry, both the realtors and mortgage loan officers and mortgage banks. Go Rascal grew.
Yep.
Did over 1,300 loans last year.
Yeah.
The company. And the company's run by two great guys, very, very sharp guys, Scott Valens and David Williams. And David is like the operations guru and genius behind the company. And Scott is, been in the mortgage business, a loan officer, as a broker for about 17, 18 years.
Okay.
And he's one of the top, no, I take it back. He is the #1 loan officer broker in New York State and one of the top in the country.
Yeah.
So he's super sharp. He's got tremendous experience and he's got wonderful connections. And at Go Rascal, we have access to over 77 lenders. 77 lenders, right? So it's not just, right, I worked for one bank, and then I worked for another bank, right? I had one bank. Now, all due fairness, in the one bank that I did work for, we could broker out.
Yeah.
We were able to broker out deals.
Okay.
But number one, there was fewer choices. And number two, I made a lot less money. And number three, I wasn't able to offer the kind of different options and deals that I have for my current clients.
Yeah.
And as a broker, I tell people I'm sort of like the Costco guy.
Yep.
Because we're wholesalers. Like we get wholesale. I mean, you know my pricing. It would be hard to beat my pricing, Go Rascal's pricing. And I would
Challenge anybody out there.
I would be willing to challenge anybody out there to give me a shout, and we'll sit down and we'll do some pricing together because our pricing is really, really pretty amazing. So we have great pricing, we have great product, we have really good people behind the company, yeah, man, it's just been an amazing. I had my best year last year in probably one of the most down years.
I know you was in demand, Pete. Like I couldn't get enough attention. I know I'm attention hog a little bit, but Pete was in high demand. And like I always say, as a realtor, you should have about 3 of everyone. Three lenders, 3 inspectors, 3 of whatever you need. Like your realtor, whenever you're out there shopping for a realtor and you ask him for something, he should have them on demand. And that's how you know that somebody is in the business and they're actually doing business. When you're like, look, I need a lender, and they can reach out to 3 different people and give you 3 different opinions. And 90% of my deals, you were just beating them on pricing,
Thank you, brother.
Yeah. And then now, because they used to go, I'm not going to lie, I used to go to other people for programs because especially for lender, like government assistance programs and everything like that, where they can get a little bit help towards the closing costs or the down payment.
Yeah.
Now you're giving away $6,000. So they just keep coming.
It's one of the reasons. It's really one of the reasons why. Listen, I wasn't looking. I was getting beat last year. Right? I told you the story.
Yes, 100%.
I was getting beat by a broker. It was a mortgage broker. Good guy, became my friend. We're friends today, and it was like, what's going on? How does he have access to pricing that I just don't have access to? How does he have access to these programs that I don't have access to? So I knew, and I started chatting with him and learning from him. And then just, David Williams called me October of 23. No, October of 22, and just got me at the right moment. And I was, in the right tone, and I was willing to listen to him on the phone and willing to listen to his pitch. And then I, researched the company, and I invite any loan officer that's watching this to research the company. Do your research on Scott Valens, do your research on Go Rascal, and take a look and see what you see. I think you'll be impressed, and also individuals as well.
Yeah, I invite anyone to go talk to Pete.
Well, you know what? Actually, no. I would love you to talk to me, because I think you could see a new world that might open up new possibilities that I know would. By the way, the young man that I was talking about who I befriended from the other brokerage, he left his brokerage. He was a top producing loan officer at his brokerage. And he left his brokerage to come over to Go Rascal because of many things, because of the programs, because we had more lenders, because of the leadership, and because of the payout. So all these, and when he was able to offer to his clients, and if you were to speak to him today, I guarantee you he would tell you he's extremely happy where he is. He's extremely
100%,
happy.
100%. I think we're going to touch on something that all of the buyers like to talk about is programs that's out there. And one thing that I really wanted to touch on when I got you here was the new multifamily 5% down.
Yeah, it's really. Wow, everybody. So November of last year, just a few months ago, the government came out with so conventional loans, right? Conventional loans, multifamily, primary was 15% down.
Yes.
15% down.
I thought it was 20.
No,
It's 15.
15.
Okay.
15. Excuse me. And then in November they said 5%. They changed it to 5%.
That's a big deal.
Big deal. I mean, why is it a big deal? Because the only option in town with 5% down multifamily was, or that I'm aware of, was the FHA loan.
Yep.
Right. But the FHA loan came with higher mortgage. Typically, it came with higher. So FHA loans with mortgage insurance, the mortgage insurance is not correlated to credit score. Not correlated to credit score. It's correlated to loan amount and LTV. Loan to value.
That's the PMI, right?
No, that's the PMI.
Yeah,
Yes,
okay.
Excuse me.
Yeah.
And the LTV is how much you're putting down. If you're quick lesson on LTV. If you're putting down 5%, LTV is 100 minus 5 or 5 minus 100. That's 95. So the LTV, loan to value, is 95. You're putting down 15%. LTV is 15 minus 100 is 85.
Okay.
Right.
Okay.
So FHA, the mortgage insurance has is correlated to the loan amount and the LTV,
Loan to value.
not credit.
Okay.
In conventional mortgage insurance, it's tied to LTV, the loan amount, the how many family, DTI, whether you're over 45 or under 45, and specifically your credit score.
Okay.
So if you have a lower credit score, your mortgage insurance could be way more, right?
Got
But
it.
if you have good credit and you're doing like 5% down on a multifamily and you're going conventional, it's a home run.
And then that touching, can we do a repair loan with that as well, or we're not sure yet?
What loan?
Okay, with the 5%, can they ask for repairs and everything like that, or?
Yeah, so you can, yes. Great question. So like you're thinking like the rental loan, the renovation loan?
Yeah, rental loan.
Yes, you can. So you could do a 5% rental loan and still be conventional, yes.
Is this in particular market, or is this just nationwide?
Nationwide.
So that's crazy. So think about this. That rundown little 4-family that you saw, you can get a rental loan, renovate it, put 5% down, and live in the property and rent out 3 of the units. That's big, Pete.
Boy, I better be right on that.
We're going to double check that in terms of the rental loan.
I am 99% sure.
Okay, cool. So we'll look into that and figure out if we can get that done as well in terms of a rental loan, definitely. Pete, are there any other programs out there that we can think of that the people may need to know of?
So there's a couple of really popular non-traditional loans that are taking place these days.
Oh, yes, the P&L.
And you know
loan. Almost
them.
forgot.
You know them. One of them that is really, it's really crazy. You know, I don't know if it's that self-employed. We have perhaps more self-employed people are coming my way, but one loan is the bank statement loan.
Yes.
Bank statement. So what it is you're using, so it's someone who's self-employed. And what I'm about to tell you are loans that apply towards folks who are self-employed.
Okay.
Self-employed.
1099.
Well, you could be 1099 or it could be corporation.
Yes,
or an
yes, I
LLC,
forgot. You can do corporation,
something like that.
LLC.
So these are folks who have a business for at least 2 years, and they're putting money. They're depositing money into their bank account, into their business bank account, and we look at their business deposits over a 12 or a 24-month period. If you go 24, you'll get a better interest rate.
Okay.
Right? 12 or 24-month period. We take all of the business-related deposits, we add them all up, and we divide them by, if it's 12 months, we divide it by 12. If it's 24 months, we divide it by 24. We take the average of your monthly deposit, right? And then we multiply it by an expense factor.
Okay.
Right? What's an expense factor? It's an expenses to run your business. So, perhaps it takes, your 30% of your business is expensed. Of your gross proceeds are expensed. Who dictates that? Your CPA. We get a letter from your accountant, your tax preparer, your CPA, and they say, Itashwa's business is 30% expenses. So we'll take, let's say your average deposit per month is $100,000. Let's say your expense factor is 30%. 30% off $100,000 is 30,000, leaving over 70,000, 70%, 70,000.
Okay.
So 70,000 would be your monthly income.
Wow. Okay.
That
And
gets you a lot of
simple.
house.
Yeah.
That gets you a lot of house.
Yeah.
Now, if you have a business partner, let's say you're 50-50 with a business partner in that business,
Yeah.
well, then we have to take 50% of the 70,000.
70,000.
That would be 35,000. Still a very strong income per month, right?
Yes,
It can buy
yes,
you a
yes.
lot of house.
Yeah.
So that's the bank statement program.
Yeah.
It's a wonderful program. So you got to have bank deposits and you got to have a CPA to say that, you've been in business for 2+ years and
Yeah.
what the expense factor is.
Okay.
If you don't tell us what the expense factor is, then we default to 50%.
Got it.
Default
Got
to
it.
50%.
Yeah,
Right.
yeah.
So if your deposits are 100,000, we take half of that as expense, and you get 50 grand.
Okay, cool.
Okay.
So if we can't come up with that, it's going to just be automatically 50%.
Exactly. And
Got it.
sometimes, and I've done 50% where we didn't have to ask the accountant, and it was fine.
Yeah.
Because I had a dentist whose deposits were like 100 grand a month.
Yeah. Yeah.
So that's the bank statement program. Then the other really popular program is the P&L program.
Yes.
P&L.
That's what we
What's
really want to
P&L?
know.
Profit
and
and
loss.
loss. Profit and loss. So that's where an accountant, taxpayer, or CPA prepares a P&L, profit and loss, for the client. And what's profit and loss? Well, it's basically sort of like a mini tax return, right? I mean, this is your gross sales. These are your deductions. Take your deductions off of your gross sales, and this is your net. Take your net and divide it by 12 months, 24 months, however many months the P&L is.
Okay.
And then we derive your monthly income.
Got it.
Right?
Got it.
So that's a P&L, and that has to be done by a CPA, taxpayer, or accountant, and then a letter with that.
Okay.
No tax returns, no pay stubs, no W-2s, no
That's
no bank statements. Yeah.
So that's good not only for those highly professional dentists, doctors, and lawyers and everything like that, but even for like the common, like if you're an Uber driver and you're making a decent income.
I've done it for Uber drivers. I've done it for home health aides who are self-employed. You could be anything as long as you're self-employed and you have an accountant that states you've been self-employed. You're self-employed.
Okay. That's
Yeah.
awesome. That's awesome. Peter,
Yeah.
you always come with a lot of knowledge, my friend. And
I try.
we're going to try to do this, at least once a month or once a week, however we can get this done, because I think you got a lot of information to let
Thank you.
everybody
Thank you.
know.
Listen, one of the things that first of all, I really enjoy talking with you. So
Thank you. I appreciate it.
anytime I really like to speak with you. So, but one of the things that I pride myself on, and I think you do as well, and it's important, is to educate people.
100%.
Right? Because if we're here, we're on the street, we're banging it, this is what we do for a living, and if we educate the folks that we are working with, they'll feel more comfortable with
100%.
right? Because it's like, oh my God, these guys know what they're talking about, and they're willing to share the information.
100%. 100%.
So it's, it's my pleasure to do.
Pete, thank you so much for being with us, and hopefully we'll see you next month or maybe in the next couple of weeks, and
Yes,
we'll
sir.
go over some other
Yes, sir.
stuff.
Let's do it.
This is Itashwa Watkins, your favorite realtor. We'll see you guys again soon. Peter Karlin, people, reach out to him. We'll have all of his information. I'll see you guys soon. Peace.
Take care.